Hello everyone, great to see you again. So this week I've tried to uh, get away from work, get away from everything, and try to relax a bit and visit one of my friends in the north of England. Also, I've just seen one of the hero. When I heard about him, it was my childhood. The first time I heard about computer, I actually heard about him, and that is Alan Turing. So if you don't know about him, you might see there's a film called Imitation Game. He cracked the codes for Enigma, and during the Second World War. So yeah, back to the topic of our channel. I think I have been kind of discovering different topics, but kind of avoiding a very big topic for a long time. And I think we really need to get onto that. So from this week onwards, what I will do is I will start to talk about it. It's a big topic and it's really important. I don't want to get it wrong. So, but I think I'm ready, and I think people need to know. A lot of people need to know because they will be starting to work on this area. This is about billing. Um, so, starting from this week, I will be discovering about billing, different aspects of billing. It might run through a few videos, just start with some basic illustration and concepts, and yeah, so we will discuss more in the video. Have a good weekend and see you later. Hello everyone, great to see you again. So as we said, we're gonna start this billing topic. So today we're gonna look at the first thing. We're gonna have a look at actually how financial transactions works, because it is such a fundamental element within billing, and we're gonna touch upon a bit about how the accounting works, and what is the basics around the accounting, and how they actually play in the role of billing, payment, adjustment, etc. So first of all, as we said, we're just gonna look at the accounting concept. If you haven't done any billing implementation before, you might not heard this concept, but as long as you are aware or understanding what we are doing, I think things will become much easier when it comes to the actual problems. Second, we'll look at the financial transaction basics. And third, we'll look at where financial transactions are generated. And last, we have a look at the entity relationships and see how it is being linked with the other transaction data. Okay, so part one, accounting concept. Right, I've tried to put down a few concepts which I believe they are most crucial topics in not only accounting but also in terms of C2M if you want to learn billing. Okay, so if you're new to accounting or new to billing, these terms might be new for you, but let me try to explain what they are. First of all, call it double entry accounting. Okay, so when we are doing accounting, what we normally do is we will have a debit, let's say a debit of £10, and at the same time, you would have a credit of £10 from somewhere else. because £10 debit to utility that would actually mean £10 credit to the customer. Okay, so it's always working a plus minus way. So as long as the debt and credit they're balanced, you can say it is being fully matched. But if it's not balanced, then either the customer is owed some money or the customer is need to pay the amount owed to the utility. So when we look at accounting, when we look at financial transaction, we should always be aware whether the amount is positive or negative. Normally negative in C2M means it's in credit. Positive means it's a debit. And we look at the aggregation of these financial transactions and then see if it is what is the balance on the account. So that's how the balance is calculated. Second thing is about general ledger. I think if you haven't heard of this term, you can think about it as a collection of financial transaction. Or you can think in a way that this is a categorization of financial transaction. Because once we have the financial transaction, you can, for each of the financial transaction, you can categorize it. Say this is for billing, this is for energy, and this is for insurance, and this is for charity. And when all the financial transactions are collected in general ledger, we can actually understand what is the financial impacts. And normally that would have more impact in terms of the tax implication, how the accounts are prepared for the company, for example. So there are a lot of other things which is probably outside of C2M, but these are very important concepts when the financial transaction is generated. Each of them should be assigned to a general ledger and eventually sent to the general ledger for reporting. Okay, so move on. Open item accounting. Okay, open item accounting is actually quite simple to understand. Open item means if I have a credit, I need to match it to a item. Okay, open item could be a bill, could be a adjustment, could be anything, but it needs to be mapping between the items. With the items. So in that case, for example, if you get a bill for £100 and you pay £100, it's an exact match. And this is a classic open item accounting. If you get a bill which, say, £95 is the energy, £5 is the adjustment, which is which could be, say, it's a one-off charge, and you pay £100. Again, it's a exact match. So the match is happening in open item accounting between the payment and the bill and adjustment or adjustment. And that is how open item actually works. Now, third one, balance forward accounting. Balance forward accounting works a bit differently because it doesn't match up to any bill or account. It only applies the credit to the customer balance. So very classic example is you don't pay bills every month, but you do pay for direct debits. And every month, for example, you pay £100 direct debits for electricity and water, but actually every month the bill is different. Sometimes it's £150, sometimes it's £65. But that doesn't actually matter because when the match is done, it is matched with the with the oldest debt, which is indicated by the oldest financial transaction. Could be a bill, could be a adjustment, but it doesn't have to be matched exactly to a bill like the open item has done. Okay, so next one is account receivable, which manages the. So this is a way of how the how we describe the accounting in C2M as a general, because what we do is we have the account we have in CCMB is a billing account. Now, billing account doesn't say have a number to indicate this is my balance. You have £50 to pay. Rather than doing that, the balance on the account is always calculated dynamically. So every time you look at the account page, you see the balance. It's actually by aggregating all the financial transaction, which is still not matched, under the accounts. Could it be in different ways? Because we said financial transaction is well, we haven't said that, but financial transaction is literally linked to the service agreement. So if under one account you have just single fuel electricity, one service agreement, then all the financial transaction under that will account for the balance. But it's also possible that you have two service agreements, electricity and gas, then all the financial transactions under both service agreement will account for the balance. Okay, so this is the way how customer balance works. Agent report is similarly it's similar because age is determined by the frozen time of the financial transaction, and if it's been frozen a long time ago and still not be able to match, then the age will be long time. But so that's why the balance forward always trying to recover the oldest debt to make sure the oldest bills are paid first. And then collection workflow, that means if you have certain criteria, say the debt over 165 days is over £10,000, then we're going to start collection process. Potentially you can define different actions at this stage. Similarly, credit management, credit score, security deposits. Look, all these financial information, the base of it is financial transaction. So financial transaction is the most fundamental element when it comes to calculate bill, payment, adjustment, balance, etc. Okay, so we need to understand how it works and what when they are generated, when they are frozen. So as long as we understand that part, we will be able to understand the individual process like billing much better. Okay, last one, general ledger. I think we talked about this. This is just a category of how the financial transactions are allocated. Okay, so second part is the basics of financial transactions. Right, so first one, let's talk about the financial transaction status. When a financial transaction is created, um, when the bill is created, payment is created, financial transaction is created in pending status. But when the bill segment, payment segment, or adjustment is frozen, financial transaction is frozen. So when that financial transaction is frozen, the frozen time is being used to calculate the debt, and also it impacts the age of the debt. Age of debt, the amount a customer owns in total is immediately affected by the FT, regardless whether the FT appears on a bill. Exactly, because FT doesn't have to be only generated by a bill. It could be generated by a payment. So in that case, it adds the credit to the account. It means the age of debt may not be in sync with the total amount owned. It's very true because let's look this way. We will talk about that in a bit more details. Financial transaction is generated from bill, segment, or adjustment. So any of it generates a financial transaction. It's gonna impact the balance. Current and payoff balance. Okay, so this is very important concept. Officially, that's what I've written down. It's saying current amount contains how much the customer think they own, and the payment amount contains how much the customer really owns. Okay, what that actually means is the payoff amount is the amount the customer must pay before they clear the debt. Okay, they clear the balance. But the current amount is how much needs to pay at this point. Let's say you have bought a car. Okay, so you bought a car, really nice Tesla Model S. Okay, and let's say it's roughly 40,000 pounds, and you say I can pay off that in 4 years, which means every year you pay you pay 10,000. So within the first year, your current amount is 10,000 pounds, but your payoff amount is 40,000. Because if you don't pay it off, then that means the car is not yours. But at the moment, you only need to pay 10,000. Second year, same thing, 10,000 in terms of current amount. But your payoff amount is going to reduce to 30,000. Right? So in that case, you can understand the difference. And normally, I think the payment current amount and payoff amount is same for most of the financial transaction. The ones which is not same is probably like those payment plan, where the customer pay if they own certain amounts and they cannot pay off quickly. They say spread that to 24 months. In that case, your payoff amount is the whole 2-year debt, but the current amount will just be whatever is you need to pay at the current time. So that's probably easier to understand. GL interface, we said the financial transaction will be categorized to a GL code and sent to GL, interface to GL eventually. Okay, south of Financial transaction. Okay, we already said, okay, financial transaction is created by bill payment and adjustment. But let us be a little bit more specific. Financial transaction is generated by the bill, but the bill is against account. So on account, you will have bills. And for bill, it's constructed from bill segments. And each of the bill segment is against a service agreement. So we talked about the example of dual fuel, right? Electricity and gas. We have two SA. Bill segments, if you generate a bill for this account, you're going to have two bill segments, one for electric, one for gas. And the financial transaction is generated in line with bill segment. So in this case, you have two financial transactions for this particular bill. Okay, so this is one thing to understand very well. Now, similarly for payment, the customer see the bill £100. The payment is paid £100. However, when we generate financial transaction from the payment, which is potentially a credit rather than debit when the bill is credited, the financial transaction is against a payment segment. How the segment is created, it is very likely to be matched against the bill segment. But again, that's the same concept. For one payment, we are gonna end up with two financial transactions. Okay, because there will be two payment segments if there are two bill segments. Now, the last one is adjustment. The adjustment itself is against SA, and we know when the billing starts, all the past adjustment will be swiped onto the current bill, which means the bill is not just bill segments, but also adjustments. So adjustments are also financial transactions are also generated from adjustment side. So when a bill is generated and when a payment is made, it's not just one financial transaction. It could be many. And so the reason you have many financial transactions is, let's imagine that's dual fuel, electricity, and gas. Potentially, you want to have different GL code as well. So all these things are linking together. We will be talking a bit more in terms of that in the future videos. And then I would simply just go through a few more things around how financial transactions are reconciled. Reconcile means they are aggregated, balanced. You can use different words. But over here, the first thing is the balance control. Balance control has a few batch jobs. We will talk in details in the future. But basically, just check the integrity of the financial balance for us. Second thing is something called the match event. Now, you probably haven't heard this term, but I think I have talked through the open item accounting, right? So when we have open item accounting, we said payment is matched with the bill. Now, the match event is what links between the payment financial transaction S and the bill financial transaction S. How they are exactly matched, there are algorithm behind it, But normally what happens is if you have open item, you normally have an exact match, and that is how the financial transaction is matched with another, well, a set of financial transaction potentially is match another set of financial transaction under, and that link is called match event. Okay, so last one, account financial history, account bill payment history as a financial history. These are all main menu items. Okay, so you can access these. I think you can access these from accounts, service agreements, various objects, but they give you a very good indication in terms of what is the history of the financial transaction and how they are actually contributing to the balance. Okay, so this is quite important to understand because they are quite useful when you are investigating a particular, say, balance mismatch issue. Okay, so last one again, we want to look at the entity relationship. Okay, so right in the middle is financial transaction. Actually, the object itself is really simple. Um, but as we said, it is linked to service agreement. Okay, so every financial transaction is linked to a service agreement. Now, we said the financial transaction can be generated by bill segment, payment segment, and adjustment. Um, Technically, there isn't really a direct field to map them. Okay, so based on different type of scenarios, the financial transaction will map differently to these objects. So if you already know about financial transaction, you probably seen things like sibling ID, etc. So I think we leave these technical details into the future sessions because they could be quite confusing if we don't fully talk through the scenarios. But we leave it here. But we have to. I think what to take away from this one is financial transaction can and only be generated by these three sources. Okay, so that is everything. Thank you very much, and really appreciate for your support. And again, raise your questions and let me know whether you like the video or not. Share to your friends, and if you think it is helpful, then let it to be shared to help others. Thank you. Bye.